That's especially true for hotels because hotels is so heavy on the operations, right? You can have a hotel in downtown New York, and if it's not run well, it could do poorly. A big part of that was my dad's operations experience, right? So my father had decades of experience working in hotels, from like cleaning dishes, and all that, all the way up to like management level. And we were able to trade off of that. Here's how the hotels did when he managed them.
Let's just start right at the origin story. You started a company at 24 while attending Yale Law, as far as I'm aware. You hit a $100 million valuation within 6 months. So, like, what clicked?
Yeah, it's that was the most painful time of my life. Was that 6 months year? It literally was the most painful time.
Well, you're doing two things at once.
Yeah.
Like, was there like a party that's like, maybe I should wait?
Yeah. So there was like an inciting event, I would guess, is that so COVID hits, right? And so I knew I wanted to do real estate and all that kind of stuff, but like
and you were in college when COVID hit?
I was in law school.
That's so crazy. I feel old talking to you, and I'm like, I never feel that way.
So yeah, I was in law school. I just finished my first year. COVID hits, we go online, whatever else, and start looking around. And I had known, like, my whole plan was law school, like go work for a big firm, get some experience on the legal side, and then pivot into like a private equity fund from the legal side, and then eventually a decade after that, maybe pivot to the principal side. Right. That was always the plan.
When you say principal, real quick, like, what do you mean by principal?
Yeah.
What's the difference with that in private equity?
Yeah, so mainly I mean is within a private equity sphere, you're going to have the legal side, and they're the ones just running the contracts and all that kind of stuff. The principal side, I wanted to be the deal maker side, the actual business side. Yeah, the business side. Okay. And so, and sometimes it's hard to make that switch. And so that was always a plan. And then, COVID hits and we start looking around. We're like, this is a once in a generation buying opportunity in real estate. It's similar to the great financial crisis, right? People buying stuff in 2007, 2008, right? It's almost like, and actually when you compare, when we were looking at the thing that like shocked us was, when great financial crisis hits, people are still traveling and stuff, but like just there's a general like chilling of the economy, right? When COVID hits, it's like, you cannot travel. Right? Like in some cases, like we'll arrest you if you go somewhere without. And so think about what that does to hotels, the hospitality industry, like all these places. You're talking about hotels that were doing $40-50 million a year in revenue, zero. I mean, some of them shut down within 6 months of March 2020.
And you guys went in there and bought it up.
And so we were like, wow. If there's a time, like if you look at our macro thesis, if there's a time to buy hotels. Like and not that a bunch of them were being foreclosed on. This is a different in the buying between the great financial crisis and the COVID stuff. Great financial crisis was like extended pain, right? And so there was going to be some foreclosures and then buying stuff from banks and all that. COVID was like a temporary dip, and everyone knew that it would likely come up, but we didn't know how long that was going to be. And so there were a lot of hotels that were just they were empty. They had done even smaller hotels. They had done $3 million, $4 million a year before. Now they're doing $500,000. And so we're like, this is the time to buy. And so we went out. Yeah, it was during law school. It was like I remember my schedule was like, law school, it was 8 to like 2 or 3, 8 a.m. to 2 or 3 p.m. And then like company until like 1 or 2 a.m. and then sleep and then do it again. And it just like for like years. And it was brutal. Like it was the most painful. Even knowing the success we had nowadays, if I were to go back and someone were to say, would you do that again? I think I'd have to think about it to say, do I want to go through that again?
You didn't know, obviously.
Yeah. And at that time, the sucky thing is we didn't know if that would pay off. Like we worked for like 6 or 7 months.
When you keep saying we, I just want to know like who you're referring to when you say we.
So I had 2 partners that I founded the company with. So my father, he worked in hotels my entire growing up years. He was working in hotels. Everything from very first job was driving the shuttle to and from Disneyland. I grew up in California, and then managing hotels, and then working for the companies that manage the hotels. And so he had gotten sick, and so we were like, hey, let's do something together. Like this is the time to do it. Let's jump in together. I'll kind of handle more of the private equity. I had done some stuff on Wall Street and some other things, and so I kind of knew that he knew like the hotel operations really well. Mm-hmm. He knew how to look at a hotel and say, okay, we need to cut down the staffing. We need to figure out the labor, the purchasing, like all that kind of stuff. And so him and I, and then actually an uncle of mine who was a lawyer, and he had done a lot of litigation in the hospitality space, and so. And he was looking at expanding his legal side and also doing some of the business side. And so we said, the 3 of us, his family, let's get together and let's try to buy some hotels.
Did he handle the law side, or do you?
So we do a little bit of both. Okay. He handles more of the like truly legal, like you need someone to sign off, an attorney sign off.
Gotcha.
I handle quite a bit of the business structuring of it and the deal structuring and kind of the junction between the legal and the financial and the business side.
Okay. So when you started this, by the way, like, can we say this is a fund? Is that the easiest way to describe it?
Yeah.
Okay. like, how did you get your first initial clients?
Yeah.
Like, and where did you get the money from?
So we didn't have a lot of money ourselves, right? Money. It's not like we had some that I'd saved up. I had a tech company previously and had some other things that.
Bro, it's like just more and more comes out. Tech company, Wall Street. It's like, what do you not do?
No, not all I do is this. This is all real estate.
It's like, yeah, I'm 24. I've been to Wall Street, had a hedge, tech company. No big deal.
So it's hard to raise money. So there's a couple things that really worked for us, and I think it really is the pattern for raising money when you don't have like the traditional fundraising. So traditional fundraising, like if you're a Blackstone, right? If you're Schwartzman, he worked on Wall Street for made partner. It's same thing with like the Bear Stearns guy, Lehman Brothers guys, like all these guys, they work partner. They're in their like maybe late 30s, early 40s. And then they go out and they just go back around to all the hundreds of institutional funds and investors that they know that they've been working for 20 years at these other firms, and they go raise money, right? That's like the traditional like fundraising. We didn't have that, right? I was 24. But what I did have was we knew that we weren't going to be raising the same amount of money those guys were going to be raising. Right, and some of these guys that were raising money, these big funds, they were not able to pivot as quickly. They had some of these big funds had billions of dollars that were committed out for 5 or 6 years. Not like they could just all of a sudden change their thesis midstream. And so we were nice that we could be pretty agile in that sense. And so I took a very simple approach to it. I thought when you're fundraising, you're trying to solve for two things. One is you need to convince people to invest in the industry that you're wanting to fundraise in, right? Real estate, hotels. The second one is you need to convince them to invest in your specific deal, right? So you have a lot of folks, right? There are a lot of folks who invest in real estate. That doesn't mean they're going to invest in your real estate deal.
Of course.
Of those two, so the first thing we went out, we just started going out to I knew some people from Yale and stuff like that, and just started talking to people. And it became very obvious to me that we were not going to get anywhere, and we weren't going to get anywhere fast by trying to solve both of those at the same time. It was very, very hard to solve both of those at the same time. Because you'd find folks who were super good investors and like big investors, whatever, and then they're like, oh, I don't invest in hotels. And we're like, okay, well, why are we even talking then? Or they're like, or one of them, not big investor, maybe he was investing like 500K to $1 million. And we spent like 3 months just trying to convince him why he should invest in hotels. And at the end of the day, he was like, I just know, I invest what I know. And it's like manufacturing stuff. And we're like, okay, let's figure this out.
Gosh. Like, bro, I just wasted 3 months with you.
Yes. I mean, talking about like dragging all of the data, like showing him the hotels, like all this kind of stuff. And so I said, okay, how do we qualify people where we're just finding people who already love hotels and know hotels? Because it's also like some uncertainty, right? People are like, okay, like I don't know about hotels. I don't even know what to look for, all that kind of stuff.
Right.
How do we find those people already? And now we just have to convince them to invest like in our team and our deal. And so the way I did that was, and I came up with our fundraising plan was, we're going to go to all of the sectors that are adjacent to the hotel industry, mainly the areas that service hotels, and we're going to look for all the folks there, and we're going to try to raise money from them. So for example, I'll give you an example that I knew is the lawyer side. There are a lot of law firms that specialize in hospitality law. A lot of them, boutique, kind of not these big law firms that you'll see in New York, but 5 or 6 guys in some little office somewhere, and all they specialize is in hotel franchise agreements, the lending, the construction of hotels, like all that.
I didn't even know that.
Yeah, and those guys are easy to find. Like they're advertising their services, right? And you can talk to the partner. Some of these guys are making like $3, $4, $5 million a year because they're just like super specialized. They charge $50K for a transaction, and they do 5 a week. Wow. And so it's like, well, these guys. So it's nice that we go to these guys, and they're like, oh, we love the hotel industry. Like I know everything about the hotels. Like what kind of hotel? And we're like, oh, it's a Marriott, it's a Fairfield. They're like, oh, I've seen 5,000 Marriott hotels of this kind, and make sure you look out for this or this. And we start talking to them, and they're like, and they realize like, oh, like we like the team, and they're already sold on the hotel side. Some of them had invested in hotels. A lot of them, though, surprisingly, hadn't invested in hotels directly. They never had opportunity, even though they serviced like the hotel industry from the legal side. And so we raised
never had like a fund approach them.
Right, exactly. Or if it was like some kind of like client of theirs, and there's always like conflicts there, or there's like something like that. And they also recognize the same thing that we recognize. Again, the people in the hotel industry knew 2 things. They knew that COVID was bad for hotels, and they were bullish on hotels long term. You might have said that they had to be forced to be bullish because their entire business was based on servicing hotels. So like law firms.
Was your guys' thesis like these hotels are going to get shut down and sold or something? We'll buy it up, and then when COVID's done, then we can scale it up. Or were you guys like waiting until, hey, we think COVID's about to end, let's buy it then?
Yeah, so we started buying in the late Q4 of 2021. So COVID had already started to. COVID was there to stay at that. At that point, this is through 2020. Now in 2021, hotels had taken the hit. A lot of hotels are open at this point, but they're still recovering. And so people who didn't have lenders that were happy, extensions that they could have or whatever else it was. Now they're starting to feel the pressure.
Okay.
So basically you have a year of like real bad turmoil, but a lot of people at that point are like, let's wait and see.
Were you guys worried it was like going to go on for a lot longer? So like, I understand you're trying to come in at the downturn, but what if you
don't
come
time
in
it.
too soon and then it's like, it stays for years or something? Were you guys afraid of that?
Yeah, and so when we raised money, we looked at two areas of hotels, and we think that they have different exposures to like a protracted downturn from a pandemic.
Yeah.
One is the ultra luxury hotels, Waldorf, Ritz, Four Seasons, Westin's, like these really nice hotels. Those hotels get killed during COVID, but if they're resort areas, they typically opened up faster because there was a lot of political cachet behind it to open up the resorts. Right. If you're the mayor of LA, you want to get LA open. If you're the mayor of Park City, if you're the mayor of Miami, you want to get those things open because your entire economy rests on the resort. People coming, visitors, traveling, hospitality, tourism. And so there was a lot of, so we knew that those were going to come back first.
Okay.
And those ended up coming back.
Yeah, okay.
All of a sudden, COVID doesn't matter if you're.
Oh yeah, it's like we have this, it's fine.
Yeah, exactly. So we wanted to do luxury. The other side that actually tended to weather COVID better, even though they had some, frothiness in the market, were the limited service hotels. And so these are like the smaller hotels that like, Courtyard, Residence Inn, Fairfield, Holiday Inn Express, Hampton Inn. These are hotels that are often like along highways. And like any time that you're having truckers coming through, like people need to stay at those hotels. Truckers, construction, you're not charging $500 a night, $10,000 a night. You're charging 80, 120, 130 bucks a night. And we knew those were going to be around. I mean, unless you want the economy to ground down to a halt, you need truckers, you need blue collar workers going places.
Okay.
And so we focused on those two. So we stayed away.
You really did your homework. I mean, you really felt like certain on this.
Yeah. We felt very certain on this, and we stayed away from the middle stuff of the stuff that was, I think, still had a lot of what we felt still had more room to go on the way down and had a protracted, which is like the big convention stuff.
Gotcha. Okay.
Yeah. So we started going around. So lawyers was a big one. We've raised tens of millions, if not maybe $100 million from lawyers at this point. Friends of friends.
Did you have a hard time though? Like, so you're just starting this business, you have no track record, and then you're just getting funds. I mean, like, obviously you have to start from somewhere, but like, did they were like, dude, I don't know, like, or like, what made them trust you? Was it because you went to Yale, or like, I don't know, like?
So there's definitely a big. It helps to have a Yale pedigree.
Okay,
so that helps. But I think more than that, it helps in the sense of it gets you probably in the door, I would say, but it doesn't close the deal. What helps was in hotels, and I think most investment funds are this way. There's like the investment structuring and figuring out how to do a deal, and then there's like the operations, which is like when push comes to shove, who's actually figuring out how to run these things. And that's true for everything. That's true for tech companies, right? Like who's actually running the tech companies. That's true for real estate. That's especially true for hotels because hotels is so heavy on the operations, right? You can have a hotel in downtown New York, and if it's not run well, it could do poorly. And so a big part of that was my dad's operations experience, right? So my father had decades of experience working in hotels, from like cleaning dishes, and all that, all the way up to like management level. So he said, I can run hotels. And we were able to trade off of that. We said, look, here's how the hotels did when he managed them, right?
Do you think if you didn't have your dad to do that this could have gone down? Like, I feel like the fulfillment is so important, having someone who knows that.
You definitely need an operational partner. Yeah, absolutely. So like for me, if it wasn't my father, it would have had to be another hotel operation person.
Gotcha. Okay.
You need the operations.
You would have brought someone in.
Yeah.
Okay.
Yeah.
Okay.
Yeah. And I think I don't think it's unique to. I mean, you typically have like within a fund. I think you're gonna have the person who's like raising the money, like handling the the actual back end operations of the investment firm.
Right.
And then you have someone who's handling the operations of the investments. Yeah. And sometimes they're hiring people for that, and there's teams for that, and all that kind of stuff. And then you have like legal and like tax administration stuff.
It's kind of those three heads. Okay.
Yeah, I would say those three. And so I mean, like, and there are other things, like there's insurance groups that are specialized in hotels. Like the heads of those insurance groups, they make like $2-3 million a year, and they're like in their 80s. Like they've been making it for decades. And so we go to them, and they're like, "Oh, I know how to insure hotels. Like I know all about hotels." Like, and the cool thing is, they're actually another set of eyes. In some ways, they're like strategic partners because they're another set of eyes in their specialty. So we had this one insurance guy ran an insurance company that specialized in hotels. He ended up investing with us. And he was when he looked at it, he was like, "Oh, there's like this like weird like wind thing over here, and you can actually like do this and self-insure this part." And like he had this like whole like complex thing, and he was like, "I want to invest." And he's like, "But here's also like some like cool little like insurance tricks." So I was like, "Oh, that's cool actually." And so we had that from like the lawyers had some stuff like that, the insurance guys, managers of hotels. We had some management folks who own small management companies that might manage like 10 or 15 or 20 hotels. Again, these guys are making $2, $3, $4 million, maybe $5 million a year, and they're in their 70s or 80s.
How are you finding these people? So like I get the strategy now. It's like you're not on social media, which is crazy to me. I mean, probably the richest guy I know is not on social media. Like, how do you get in touch with these people? Is it just cold email, cold call, or like?
So it's a mix. The nice thing about this strategy was all of those people that you want to get in front of, they are all advertising their services to hotel owners, like all of them, right? Like the entire market of an insurance guy is I need to get in front of insurance hotel owners. So part of it was nice because we had the asset that they wanted to buy for their business, right? Our insurance, okay, we can go through you. Right. Our legal work, okay, maybe you can help us out with this. Our whatever else it was, or even if they weren't directly helping with it, like they could take a look at it. But it's actually really easy to find those. Like they advertise themselves, so it wasn't hard to get a hold of them and find them. And then once you get on hold like one or two, it was just like referral. Like I think every investment we've had, people brought in people, they bring a couple more friends and so on and so forth.
Yeah, it's just crazy for me to think that 24, you had no fund experience, you just started and like you went in there and just cleaned up. That's crazy. So what do people not see behind the scenes, like mentally, emotionally, physically, that it took to make that kind of leap? Because I mean, I would say like you've done quite a bit at your age so far.
It's it's the funny. I think the thing about when people are young, and I think I probably started it like when I started, I think I probably had a little bit of this, and I became disabused of it pretty quickly. Is that they think that it's special that they're doing something because they're young, and in the business world, they don't care about your age. Like at the end of the day, they didn't care whether I was 24 or 50. But I think I find that young people they tend to have this little thing on their whatever achievements they have, and they think, well, it's even better because I did it while I was young. Yeah. And like, I don't think people view it that way. Like when you're in a meeting, like I don't think they're like, oh, I'm so impressed that you're at the board meeting and you're 25. They're like, you better not say something dumb because then it looks dumb. Like
that makes sense.
So I think that's a mental like shift that I do see. Like, cause I worked with a lot of guys. Like when I was at Yale, there's kids who are like geniuses, right? Like kids who are like 17 and they're like at like Yale Law School, right? Like graduated college and they're like 12 or whatever it was. And it's almost like sometimes these kids, they're kind of like these like, they have this like shiny, it's almost like imagine like a little kid who has a shiny toy and he wants to show everyone his shiny toy. And the shiny toy is I'm young and I did this. And it's like, I think in the business world, that doesn't really matter that much, frankly.
Did you feel like an imposter in those early meetings, or did you just feel like you're like, I'm ready?
I don't think I felt like an imposter. And maybe there's some hubris there, but I tried to be, I think when you're younger though, like I hate that I look younger too. I always tell people, I wish I was like balding by now. It would be so much better to look like I was like 40 or something, or 40, gray hair streaked through. Like that's so much better. Because it's there's a look, especially that I think there's some of that, but I think you overcome that. Like it's obvious when I go in most of the meetings. Like we went early on in the company, went out to Wall Street, met with the head of commercial real estate at J.P. Morgan Chase, Bank of America, Barclays, like all the big banks. Right, these are $100 billion companies, publicly traded. We're in there, and I'm leading the meetings. And I think you can get imposter syndrome when you don't know what you're talking about. And so my whole thing was, even though I was young, and there was some stuff that like I had to learn, and like still learning.
Of course, yeah.
Is I think the trick is to know really well the things that can be known and like know it better than anyone else in that room. And then have something that you really can like specialize in a specific deal. So for example, in the deals, like I'm known for, I read every document in every deal that we do. And so it's very,
How many
very
documents are there, by the way?
Oh man, it's a lot.
Like 100,
I mean,
200?
No, it's probably like
50.
It's probably like between 20 to 50, depending on this, including like insurance policies and contracts and franchise agreements.
Okay.
And investor documents.
You just know every detail of the deal.
I try to read everything and know it all, and at least read it all. Like you can do a lot by reading every document in a deal. There's probably no one that does that other than the attorneys, to be honest. And so because of that, you start to see things that like really, really good, smart people that are smarter than I, people who are doing it longer than I. It's so common for them to miss something because they don't see the connection between these different things. Happening right now. We have a deal right now. A public entity, a governmental entity, is putting in over $50 million into this deal. And it's part of like a public-private partnership, and there's other developers, and there's owners, and there's a bank involved, and there's this bonding and all this kind of stuff. And in the meetings, it's always clear to me that no one has read both the financing documents, all the design, all the architecture documents, typically except for me. And that leads to like weird things happening where they miss that, oh, the plat says this line should be here instead of there. And the plat says that, but guess what? The financing doc is using an old version of that plat. And so now you're actually financing the wrong thing. Like no one catches that. These are people who've been doing this for decades. I'm not saying that they're dumb or anything like that. It's just that.
What happens when they don't catch it? Like just makes the deal way more expensive or something.
Usually what happens is that they'll decide which one to follow, and then either people fight over it, so it usually makes it more expensive. People fight over it, say, hey, it should have been done this way, should have been done that way. Or what often happens is it has to be redone. So certain things have to be redone,
which is not good.
Which is also more expensive, more time, things like that.
So when you made your first deal, I guess you realized like this maybe like when did you know this wasn't gonna just be big? It was gonna be freaking colossal. Was it after the first deal, or like when did you kind of realize it's like, oh shit, like I figured this out?
Yeah, I would say it was after the first deal and when we went under contract for the Waldorf Astoria. I
think you even told me about that deal. That was crazy.
Yeah, so we bought a bunch of smaller hotels first, like these small courtyard residents, these kind of ones. We bought a bunch of those, and then we went under contract before I graduated from Yale Law School for the Waldorf Astoria. And I think when we went under contract for that one, I realized that this is. I mean, it also nice was I had a job offer for a really big law firm, and they pay hundreds of thousands of dollars. Yeah. And when you can make more than that in a single month doing doing something like this when you're still in school. That's when I was like, oh, well, this is what I'm going to do instead of.
Yeah, it's just so crazy to me. So your company now, I think I read, is worth $500 million. Does that sound about right?
Yep.
Like, I mean, and that was how many years did that take you?
3.5 years.
So like, does the valuation, because you guys are raising funds constantly, does the valuation come from just the actual physical assets? Or like, if you were to quote unquote sell the company, sell the fund, like what exactly are you selling? Is it the contacts? Is it the property? Like what creates that valuation?
Yeah, so our company is not just in real estate, but basically, the valuation, you take a look at all the companies in real estate that we own. So you own, a hotel there, 10 million, 15 million, let's say you own 5 hotels that are worth, 8 million, and then you own, a hotel that's worth 150 million, then you own some land. So you take a look at, and we have to do valuations all the time for like lending and all this kind of stuff, and tax stuff. And so we do valuations, and so you look at all the stuff that the company owns. And valuations differ a little bit, like on real estate.
This doesn't include your investors, right? So like, let's say you buy a property for 20 million and you guys put in 5, like this only counts like your portion.
Yeah, our portion plus the increase in value over the entire all that kind of stuff.
Crazy, man.
And so it's like if you add in like investor stuff too like that, then it's a little bit higher than that. I mean, it's quite a bit higher than that.
What's crazy to me is I'm hearing everything you're saying, but I'm thinking, like, weren't there other hedge funds that like maybe had this idea and maybe were competing with you and maybe like talk to this, like it's just crazy to me, like to see like you go from 0 to there so fast.
So there were definitely other funds doing what we were doing. Like we were not the only ones doing it. We may have been the very, very few that were raising from not the big institution. We have a couple now institutional investors that have come and that can write $15-30 million checks. In the beginning, it was not like that. It was like $1 million here, $500K there.
And that's just going to banks and like, hey, like we're worth this much, give us money.
Usually they reach out to us, man. Yeah, we get a lot of inbound.
How do they reach out? Like, how do they know about it? It's just like your number somewhere public, or
usually when a deal trades, and this is where like I think hotels are actually nice over like there's a lot of multifamily guys, right? Like anyone like you see the multifamily guys on social media, right? I see them all the time, like Grant Cardone, all these guys.
Yeah, of course, yeah.
And the trick with multifamily, I think, is multifamily doesn't inherently have its own brand. And so you won't necessarily hear about the houses at River Oaks, got sold for $200 million. But you hear about when the Ritz gets sold in Miami, right? Or maybe not you, or you might hear about it. But also like there's news articles about it, and the brands publish things, and so hotels are a little bit interesting in that there's kind of like this built-in like branding and marketing. And so like when we buy one of these, like it goes out, and then literally after we buy one, it goes out to the market, and people are publishing about it because brokers look at it too. All types of brokers look at it because they're sending out to their clients.
It's like it's your free press. That's your social media, so to speak.
Yeah, basically. Wow. And so we get a ton of inbound all the time.
So what do you think most young entrepreneurs get wrong when they're trying to attract capital or high level partners?
I think a lot of young entrepreneurs focus so much on the vision, they forget about the execution. I've been pitched thousands of times by everyone with an idea, and so much of it is here's the vision, here's what it could be, here's all kind of stuff, and those things are important. I'm not saying they're not important. But very few of them, I think, have the experience or ability or partnership with people who have the experience or ability to say, here's how we get from here to there. And really critically, like, people always have a pitch deck and, oh yeah, we're going to scale 1,000x, tomorrow, whatever it is. Like one thing I do in our pitch decks, I'll say it straight out. It's like one of our little secrets is I always put in our pitch decks, here are like the 3, if this investment fails, here's the 3 reasons why it would fail. Here are the top 3 risks that we're going to have in this investment.
That builds tons of trust because you're looking at the worst case scenario.
Yeah.
Which is all their thing. Like, I mean,
Right.
me, what
Right.
do I always ask? What's the worst thing that can happen?
Yeah.
That's all I care about.
Yeah. And not only is what's the worst scenario, what are the top 3 risks that will lead to that scenario? And then what are you doing about those 3 risks to make sure those things don't happen? Now, you can't guarantee it, obviously, right? There's always some risk in there. But if you can be clear about, hey, we're going to, if we fail, it's going to be because there's extended pandemic. If we fail, it's going to be because interest rates are double what we projected. If we fail, it's going to be this thing. Okay, so those things are all true. What are you doing? Well, on the interest rate side, we have a rate cap, which means that we buy insurance and make sure the interest rate doesn't go higher. Okay. Now, those prices are dependent on some other things, but like so we're thinking through it. And okay, pandemic stuff. Okay, well, we're actually locking in longer term group contracts that are more that are less susceptible to the quick change of like tourism, like those kind of things that I think young entrepreneurs often miss.
What's your personal deal selection framework, and how do you know when something is worth pursuing? Like, how do you look at the deal?
So we really like to look at deals where we would have an advantage over a part of what's going to be a much better capitalized folks, right? So the question for us is when I'm looking at a deal, why is it that I'll have an advantage over the next billionaire fund that can throw as much money as they want at this? And so usually that means for us, there's in real estate, there's a geographic thing where if we own other real estate in that area, other hotels in that area, and we add on those hotels to our core group of hotels, we have actually a pretty significant advantage because we start to share resources across the hotels, right? You can share management, you share engineering, you can share labor, you can have greater purchasing power. Or even if you're a billionaire, they're just buying one hotel, but we already have 3 in that area, especially big ones like in Park City, we have 2 now. It's huge. Like I think we're the largest owner of the HOA votes or whatever of the entire area.
Honestly, I never even thought of that. That's a great idea.
And then the other thing that we like to look at is like and we have like little metrics, like we try to double investor money every 4 to 5 years, and there's certain like return metrics and things like that. But the hard part with little numbers things is that it's always easy to make the numbers work. And like every deal I've ever seen, including the ones that go bad, the numbers always worked. Like who wouldn't go into a deal if the numbers don't work, right?
Yeah, of course. I like the fact that you bring up the worst case scenarios and you're going into that, because that to me that makes so much sense, because that's all anyone's looking at. It's like everyone's like, oh, it's gonna do amazing, it's gonna do great, but because you're in sales or I'm in sales, I'm like, everyone says that, dude. It's like, show me, like I need to see some like data of like what could go wrong, because to me, most of the times, I don't care if it does as good as it says. It's just, is it going to do like at least okay? Like, am I going to lose money on this because I want to risk it? What mental frameworks or philosophies have helped you outperform like older people? I guess we'll say, because that's really where like the crazy part is like you're probably one of the youngest guys in the rooms usually.
Yeah. Oh yeah. Almost by 40 years.
It's crazy to me.
It's not even close.
Yeah, it's crazy.
No, so I think the way I view risk, and I think I learned this in law school, is it's probably one of the benefits of law school, because lawyers, well known, lawyers are very adverse to risk. And so being able to have a comfortable and a good relationship with risk is important. So like one of the things I look at when I look at a deal, and I really push our team to do this as well, is I like to think about risk in 3 buckets. And they're different skill sets. And so the more that you can, handle these 3 skill sets, the better, or your team. One is like the ability to identify risk. And so you'd be shocked at how many people don't have this ability. It's the ability to look at a business plan, look at a real estate investment, look at whatever it is. And could you make a list of 100 risks, 200, 300 risks that you think could happen to that? So that might be earthquake, everything from earthquake, terrorism to like, the marketing is off and the branding is wrong and Marriott goes bankrupt and now we don't have a brand, like think about all the risk. Okay, that's just identification of risk. Then you have to qualify the risk. So some people are very good at this, right? Lawyers are really good at this. I can give you a scenario, show me a deal, and I can give you 8,000 ways they can go wrong, right? As identification of the risk. The second one is qualifying the risk, and that is, okay, we understand there's 8,000 risks, and this is why lawyers get a bad rap, is because they're focusing on all the risk, and it's like in reality, and this is where the deal side comes in. What are the most likely, when I say qualifying it, what are the most likely? Really rank it like the top 10 or 20 or 30, right? And that's where lawyers can sometimes go wrong because they're worried about, the risk of a terrorist attack in Friendswood, Texas.
Exactly. So it's not going to happen, dude.
Right. And so that's like qualification of the risk. And this is where the operations folks are really good at too. Like, hey, here's like the most likely things. So you identify it, you qualify it, and then mitigating it. And like learning like, what are ways, and the mitigation of the risk is where you get the most creative. It's like, of all the risks that we have, now we have our top 10, our top 20 risks. In reality, most deals like top 3 or top 5 risks. But those top 3 or top 5 risks, real risks of like could happen with the company, competitors, new hotels being built, a patent gets challenged in court, whatever it is. Of those risks, how do we then mitigate them? How do we make those risks less likely to happen? And that's where you get creative about deal structure, about how the contracts are worked, all those kind of things.
Why can't people do that? So what I'll say in my industry is I say, hey, usually not very good businesses, great operations. VC funds or capital, I'll be like, great ideas, terrible operation. Like, it kind of seems like it's an operational issue. Why is that? Is it just because these people are new in funds, or like, to me, it just makes sense. Like, as a business owner, I'm always looking at the risk. Like, why do you think that is?
Yeah, there's a lot of reasons why things go wrong. Part of it is can be the structure of the firm. So there are some of these firms that have such large capital, and the way they structure their funds are such that you have to deploy the capital or you'll get penalized as the manager. Yeah. And so there's kind of an odd incentive in that situation where you're like, let's say you're a fund manager, and an endowment fund gives you, it's not uncommon, it gives you $2 billion and you're investing in hotels. You have to spend you have to invest that $2 billion in 5 years, or they're going to withdraw it back and they're going to want some interest on whatever else it is, because they don't want to commit $2 billion to you and you only spend $100 million, right, to invest in hotels, because they're like, well, I could have committed that to someone else. So now you're in the situation where you have to invest $2 billion over 5 years. There's a lot of pressure there to make bad investments or non-optimal investments.
Why do you have to? Like you said, have to. Like, why do you have to? Well, couldn't you just be like, yeah, it's not a good time and we're not going to do it? Like, why do you have to? Because you got the money and then they're like, there's pressure to spend it.
So there's a couple of things. One is that the documents in the beginning, the documents you set, part of your thesis of how you want to invest is based on how big you are, right? If I have $1 billion, I'm going to be investing in different hotels than if I have 10 million.
Of course, yeah.
And so your thesis you're selling to them is that you're going to have whatever your thesis is. So
to the investors, right?
To the investors, yeah. And so the thesis that you're selling to them is, okay, we're going to invest $1 billion, maybe we're going to invest in 10 huge resorts in like Miami, Chicago, New York, LA, whatever else it is. Well,
so they have to invest the money.
Now, if they don't, I know there are times they don't and they claw it back, but then what does that mean for your next investment when you're raising your next fund?
People aren't going to do it.
Right, or they're going to give you half of what you asked for. And so there are some weird incentives. So that's what we're usually pretty lean, and it helps that we put in a lot of our own money into it. Like most of the time, we're the largest investor in our own investments.
Why do you guys do that? Is it for that reason? Just to build trust?
To build trust, but also we have to put our own money places too. So we're like, if I'm going to put my money in somewhere, I'd rather put it in my own investment that I know that I'm managing. Right. And so usually we're the biggest. It's also, we'll like backfill any. So that's the nice thing is, instead of like raising it, in the beginning, we raised some money and bought a lot of stuff all at once. Right. Now we'll like raise just as we need on stuff. And so sometimes, let's say there's an investment. We just did an investment maybe at the end of last year, middle part of last year. And for whatever reason, it was like this is like during like, election stuff. People are kind of hesitant. Do I invest? Do I not invest? And so we ended up not raising as much as we needed to or as we wanted to. And we just backfilled the rest. And so we just put the rest in. And so it's kind of nice because we don't have that pressure of like, we raised all this money and now we have to invest it.
So do you guys pick smaller deals on purpose for that reason? Because I'm assuming some of these massive, like if I think of BlackRock, they're just getting so much money that like they have to go to these mega sized deals. Like, do you guys purposely pick smaller deals? And it's like, hey, we can either get the funding or we can invest, whatever.
Yeah. So I would say our deals are definitely not like in the BlackRock, level of hundreds of billions of levels, but we will be in, I would say our largest deal we did is like 150 million. So we're not like small, but that's like not like 2 billion, like kind of thing. That's a fraction of it. So yeah, I would say, and the other thing is these big companies have such big stuff. I mean, BlackRock has thousands of employees that in some ways it's like I know, like some buddies I know that are at Yale are now at BlackRock and are working their way up, to the partner level and stuff. And it's like, they make a fraction of what we make, even though they're managing bigger deals. They also have 3,000 people on payroll, a very high level. Of course. So I think there's a benefit of doing, selective deals that you can execute on. It's more lucrative. It's also easier to manage, and it's easier to control the progress of your investment, so that you can stop if it's a bad time to invest. We can not do investment for a year, or it's, hey, there's a good time. Let's invest double what we normally.
Do most deals, are they? How do I put this? Are most deals, let's say there's 10 funds and they're looking at deals, are these deals that kind of like come across the table, or they're like, oh, these are opportunities, or is it deals that you kind of create your own opportunity? Does that make sense? So you're like, hey, we're going to build this type of hotel and do that. You're creating it. Or is it a lot of times like kind of like how you start? It's like COVID. Okay, we're going to go like, how does that work, or is it a mix? Yeah, it's a mix. It's a mix. I would say right now it's quite a bit of us outbound doing deals, meaning that we think about a thesis, and sometimes that thesis is, okay, we have 2 or 3 hotels in this area. We want to add another 2 or 3 in this, surrounding area, or that's closer to this venue. We're kind of farther away, but we want to get one that's closer so we can manage both of them. Like, so those are like what I would think of as like the outbound deals of like us like targeting an investment and going after it. Yeah. We do get quite a bit of the other side though of folks, bringing us a deal. Hey, I know you own this hotel. I'm selling my hotel. It's also,
similar type. It's rare to find, even within the big wide world of hotel owners, which is a fairly large world, and the big institutional funds, we have extraordinarily strong relationships with the very highest decision makers, especially on the hotel brands, where they will come to us over a BlackRock or a Thoma Bravo or a KKR, and they'll say, "Hey, I have a deal here."
Why are they? Yeah, go ahead. You were about to say.
Yeah, and honestly, this is where like the cliche comes in. It's because of relationships. They like working with us. We're easier to work with. We can move quicker. We're a little more agile in things. Right. We've done, in some cases, favors for them and working out a weird complex deal. It's odd to have a workout team where we can go in and handle all the legal ourselves. We get a lot of deals like that. Yeah. There's a threatened foreclosure, threatened litigation. A lot of big funds are like, look, I just want my middle of the fairway, everything smooth. Because they're investing $1 billion. They don't want to get embroiled in a complicated deal where you have to sort out the pieces and restructure things. Yeah. Whereas we like to do that because it also has huge returns.
So are you trying to keep the team kind of the size it is, like, or you guys want to get like way more massive?
No. We would like to keep our team. we will build our team in certain areas, but we're never going to be 6,000 people on the corporate side. We have a lot of employees on the hotel side, because you have to employ all the people who manage the cleaners and all that kind of stuff. But yeah, we like to, we have maybe 24 folks on corporate side, maybe 2.5 dozen. We'll probably stay around that same size and build our portfolio, sell them, build another portfolio, sell them. If you kind of stay in that size rather than just having.
And then you guys are basically remote. I mean, obviously you have different locations, but the team, it's like it's remote, right?
It's a mix. We actually end up having, like a finance team in the same geographic area, and then the rest of us in our area. But we have quite a few folks. Like I'm here in our headquarters, and we have all of our partners. All the founders are here at headquarters, and associates and some other ones. So I would say we're not necessarily purely remote. People aren't necessarily working from home, but we have like 3 different offices right now, and we have HR like in Utah, and we have finance out of the Arizona office, and then we have ours here in Texas.
Yeah, why did you guys pick like a suburb of Houston to do that? Like it's such a random place. Like even my parents are here, I'm just like out of all places, it's just a random place.
So it's a whole thing. But the short of it was I had some family move out here, and they were kind of tired of California. We all grew up in California, and all that grew up in California. Tired of California, coming to Texas. Wanted to be close to the water, good school districts. It's like Friendswood's the place for that.
Gotcha.
And then for me, I worked out at a law firm out here during the summer, and I was visiting my family out here, and I was like, dude, I love it out here. Like it's way cheaper than California. I like the heat, so I didn't mind like that. I don't like the cold. I don't like the snow.
Same.
And and also like if you're a real estate developer, like Texas is extraordinary. Like the growth that we're seeing in Texas, you can't drive down this road. Look at the road I drove down now here. You cannot drive down this road and not pass multiple 5,000 home developments.
Yeah.
Like it's all over the place.
Well, it's just houses here, and I mean nothing. Like a house here I could get for $2 million is like gonna be 20 in Miami.
Yeah.
I mean it's literally like insane. Like it's like a mansion for a king. I'm like, what? It's like that's like 10 million. They're like, no, it's like 2.
Yeah.
That's crazy.
Exactly.
Do you have any daily habits that are non-negotiable for you? You may not, but like, is there anything you're like, I have to do these things?
So a big thing for me, I think, and especially I think with like, some of the deals we do are more public and stuff like that. Like I always we have dinner together as a family. That's non-negotiable for me. Even if I'll go out and have dinner, like for a client or whatever else it is.
Second dinner.
Yeah, second dinner. Gotta get my macros in.
I like that though. But do you move the dinner for your family, or is it like the same time and you like work around that?
We'll move the dinner for the family one, because it's easier to move that around, things like that. And so it's easier. I'd rather be really good at dinner time with the family.
Yeah.
And I can move that at 4 or at 7 or at 8. Then like, oh well, sometimes I miss it and sometimes I don't.
Is that just your immediate, or is it like
just immediate? I have 5 kids.
Okay, so that's a lot. Yeah, that's a lot.
So that's like for me, and I know that's not true for everyone, but for me, like, and I really early on, I was like, I don't want. There's a lot of things you sacrifice, right, on the altar of success, right? Maybe your health or whatever else it is. Right. Like for me, I don't want family to be one of those things that was sacrificed. Gotcha. And so that's not negotiable for me. I mean, the other thing is like I'm a big reader, like huge reader. I probably read. I'll read an hour in the morning, and that's like news, but also just like fiction books, nonfiction, all of it. And I read usually about an hour in the morning, maybe an hour or 2 at night. And I do that every single day.
Why do you like to read so much? Like, is it just a like you have, or is it just a way for you to learn? Like you just learn a lot.
Yeah, it's the fastest way to get good at something. I mean, half of our company, more than half of our almost 90% of the stuff we did in the beginning was because I checked out all the books that they had at the Yale Law School library about private equity, fund structure, even the finance books. Like, just checked out every single book. And it's shocking how people who've been in the industry for 20, 30 years don't read, don't stay sharp on things, don't understand what's coming up, the new stuff in the pipeline, don't have a broader understanding. Like, there are things that we do in the manufacturing world. We have a manufacturing company, we make parts for SpaceX, Blue Origin, all those things. And there are things that we learn in the real estate world that directly apply to manufacturing that's unique in the manufacturing world. This like cross pollination of knowledge.
When you're reading these books, do you find, even if it's like not related to your industry, like you said, you read nonfiction, et cetera, like, do you find like all of that helps, or do you just like read a bunch of different things in general?
I think that reading helps you articulate yourself, because when you're reading something, you're basically walking through the footsteps of the author's thoughts. That's how writing works, right? They take their thoughts, which is their path of thinking, whether it's linear or not, and they're putting it out in the words. So as you're reading it, you're able to articulate. So yeah, I mean, there are times where I'm a big fiction reader. I love a lot of fiction books. Even reading those, it allows you to describe things in a more interesting way. It allows you to visualize something in a more captivating manner. And so all those things, it expands your vocabulary. Like, all those things are good in business.
Do you have a belief or approach you had like in your early 20s that you have completely changed now? So you used to do it this way, now you do it this way? Oh,
well, yeah. This is small. One small thing, one big thing. Small thing is I used to be super digital on everything. Like, everything's digital. And I've gone back to analog a lot lately. So like notebooks, like I used to bring, my computer to places and typing all the time. And now like I take notes in a leather bound journal. And there's something about that I think is a little bit more intimate, a little bit more close. And I don't know, just something that maybe gets my eyes off the screen. Maybe it's just as simple as that. But I used to be like everything digital. Now I'm like, as much as I can. I like to order the paper, like actual,
the newspaper. Oh man.
But I think one bigger one is I used to be really hesitant, or not hesitant. I used to be really not good at training like the team. I used to be like, let me just do it, and like, kind of thing. And as we've grown, it's kind of been forced upon you, where like, you have to train the other folks. And it's like make these like little mini me's, kind of going down. So I'm training a couple people right now on our team. And early on, I didn't care about like training other people. I was like, I needed to learn how to do it. I needed to do it. And there's been a huge shift of like, I got to get them to think the way I think, to look at the way, look at deals the way I look at. And that's been a shift.
Are these people, what are they mostly doing? Are they finding deals? What is their main job?
No, most of them help me on the management of like the deal. So it's like, there's a lot of like little like deadline, timeline stuff, like on a deal, like on a real estate deal. So for example, you might have, let's take a real estate deal, the most classic real estate deal. Let's say you buy some land. And you buy that land, you got to manage the closing of that, which is all, the insurance, title, survey, environmental reports, et cetera, et cetera, et cetera. You get all that done and ordered and set up. And then let's say you get a loan on it. The loan has their own 18 different requirements. You got to do that. And then once you buy it, then you got to track, okay, now we have an architect who's designing it. We have an interior designer. And we're managing all those. We're going to those meetings. We're taking notes and figuring out to-do lists. And then we're trying to look for, where the little gaps and things. And so it's really the business of doing the deals.
How big is your team?
So total, we have like 200 employees, but that includes some of the hotel folks like on property.
So let's say 200 if you include them. If you take them out, how many?
I would say it's probably like 30, maybe. Still, like above property.
It's just still. I mean, it's still like that's a big team, dude.
Yeah.
Like I guess like just on the outside, I haven't had that much interaction on it, which makes sense. I wouldn't, but I didn't like 200 people is like pretty big.
Yeah, I know.
Pretty big team.
And that doesn't include. And the thing with real estate too is that doesn't include things like you need to hire. There's a lot of these folks that you're still managing that you're hiring out that are kind of part of the team, at least temporarily, for that deal.
Yeah, like contractors.
Yeah, exactly. Like the architect, interior design, broker, stuff like that. So that all requires management too.
So obviously you have 5 kids, you mentioned that, and you're running a 9-figure company. Like, how do you try to manage both?
There's a principle of it's called selective neglect, which means that there's not going to be balance, and that's okay to not have balance. I think there are times where I'm at work and I can't do other things other than be at work, or I have to travel. I had to go to the UK last year for a day trip. I flew out there on a day, looked at a hotel in the northern England, and then didn't even spend a night there. Flew right back, and it was like, and then I was like out for like a day because of like jet lag, and it was like weird. I landed at like 2 a.m. and so there's stuff like that. And then there are times where like we go on vacation, or like kids have like sports, or there's like a weekend or whatever, and like I have to be there, and like I'm not going to be answering. And so I think a lot of it is like who you marry, like when it comes to family and like spouse and stuff like that. And my wife's an all-star. Like truly, Wolfgramm Capital would not exist without my wife. And then also I think it's just trying to be like cautious and have like regular check-ins of like, is this working? And do I need to like invest in one area or not, or maybe pull back from that and do more on this.
Like check-ins with your wife, like do you have weekly check-ins or something like that?
Yeah, weekly dates are huge for us. And we talk about like, am I spending enough time there? And I'll let her know, hey, like this is like a personal thing, but
Sure.
with my wife, it's like a lot of times it's like if she can knows what to expect, it's a lot better. So if it's like, hey, we have a closing coming up, like you probably won't see me for like the next like 2 weeks.
She's not wondering why that's going on.
Yeah. But then after that, like it'll be a little bit more calm down, and I'll work from home for a couple more days.
Do you feel like treating your marriage like a business is like, or do you feel like you treat it like that, where it's just like, hey, we have to do this, we have to do this, we have to do this, like stuff that, maybe you don't feel like it, you're busy, but it's like, it's good for the marriage or something like that?
Yeah, I would say that it's in similar ways. Like I think it's impossible for you to learn skills, whether you learn skills in your marriage or you learn skills in your business, you learn skills at school, whatever else it is. I think it's impossible for that not to cross lines into other things, right? Interpersonal relationships that you develop and how to manage conflict that you learn in a family or marriage, that's going to carry over to how you manage stuff in your business. And so I think there's ways that you look at that both ways. For me, it's mainly like I find a ton of joy and a ton of my value comes from like being a father and a husband. The work stuff is cool and I like it and it's a big part of my life too. Like I find a lot of joy from being a father.
Like so you got married, how old were you?
I was 20.
Jeez, bro, you really got married young. Jeez. And then you had 5. Yeah, because I was thinking like you were 24. I was like, oh man, he had 5 kids. He must have really been moving. But you got married at 20.
I married at 20. I had like 2 kids when we started the company.
Like how long had you known your wife at that point?
We had dated for 7 months.
Wow, bro.
But I had known her for a couple years. She was a friend of a cousin of mine that I had known. So we knew each other, but we hadn't dated.
That's crazy, man. 20 bro, yeah, 20 years old is like, I mean, even my dad, I think he got married like 22, 23. Like 20 is crazy. Like, was that always the plan?
Yeah. I don't like the dating phase, So I wanted
it's annoying for sure.
Yeah, exactly. So I wanted and this is, I don't know, this is my maybe controversial take is like, people talk about, I want to travel before I get set down. I was like, no. I want to find who I want to be with for the rest of my life and go do all that stuff with them. Like that was my big thing. So like I wanted to experience as much as life as possible with the person I wanted to spend the rest of my life with. And including like being super poor. And like I remember literally like I think I looked at my taxes recently. When we were like in college, I never made more than like 10 grand a year. Like I was doing like research assistant stuff, like putting together little widgets at this one like gas factory thing. Yeah. Like I wanted to experience that with her. I wanted to experience like.
Well, she likes you for you.
Well, yeah,
like
that's true.
Once you fall into money, bro, it's way harder for sure.
Yeah. When we got married, she was the only one that had a car. I didn't have a car. I didn't have a credit card. I had nothing.
And then like you guys started having kids. Like how many years into the marriage did you start having kids?
We had our first kid when we were married like 2 years.
And was that always the plan? You're just like, hey, I'm gonna start having kids, right? Yeah. So did you ever have a phase where you thought, hey, let's be married for a little bit, enjoy life, and then have kids? Or you were just like, hey, I want to have kids right away? Yeah,
we both were like, we want to have, we started trying right away. And part of that was like, we felt, and I get that it's controversial. We thought it would be more fun to have life with the kid around. It's like we lived 7 months in the Middle East. I was a translator. I speak Arabic, so I was a translator out there for 7 months. We took the kid along.
Of course you speak Arabic.
And so we took the kid along, and he was out there riding goats, chasing the sheep around, and like that was fun. Like I don't know.
Wow. Yeah. What do you think that's more just like your personal view on life and desires, or do you think it's more religious or a mix? I mean, I'm just always curious to understand like why you think the way you think.
I don't think it's particularly religious. I think it's like. I really enjoy being around little kids. Like I have like younger siblings I like my niece and nephews are born, like I like them. And I think part of the problem that people have with kids, again, this is, I'm not a parent counselor, is that they don't raise the kid to fit into their lifestyle. And so then they feel like the kid is like baggage or something like that. Whereas I'm like there are things that I love to do. And obviously, you can't like have like, there's certain things that you wouldn't bring a kid to. You're not gonna go take them to an action movie when they're like 2 years old, or certain things like that. But it's like I like to travel, and so like my kids, like they know how to travel. Like they've been flying on planes since their time they were like 3 months old. Like they know how to travel. So like it's not a big deal for us to travel with them. We're like they can sleep anywhere because we're have to stay at a hotel. We have to go whatever. So like it's not that big of a deal. Or like they can they also like wake up early because I wake up early, and like they play. So like I think it's like the type of life you want to live. Like I think that kids and marriage and all that can fit into there, not just fit into it, but actually enhance it.
Yeah. Like, are you gonna have any more kids?
Oh, but man, hopefully.
Jeez, like, do you have a number?
We don't really have a number because we're kind of seeing like so long as my wife's been like healthy and all that, and she's been like all her pregnancies and stuff like that have been like super easy and healthy and all that, which I've been grateful for.
My sisters, man, it's like they make me scared to have kids. Yeah, they're like it's like World War III or death almost every single time. It's crazy.
Yeah. So we've been fortunate that it's been easy, and so I think we'll keep having kids until it's we feel like it's done, but we haven't. Yeah, we haven't.
They're 7 and below, right?
Yeah, the oldest is 7.
Oh, crazy. So, like, what are you trying to teach your kids about money and work ethic, if anything?
So this has been super fun, honestly. This is like I imagine like when you have kids, like this will be fun for you too, because it's the same thing where it's like I just told my oldest son, I just taught him about stocks, like for the first time like a couple months ago, and he's like obsessed with it now. Like he loves it. Like it's just like
so funny.
just the idea of like investing and like the ideas of the principles on investing in money is the same thing about principles investing in your life, your health, right? Little things that you do every single day for your health. Like you can't just go work out for 24 hours and then be done for the year. Right? I wish you could do it, right? Like the little things you do every single day, and sometimes it takes long to see the whatever. And so there's like those principles, and so it's been super fun to like teach them about like thinking strategically. A big thing that we do, I think this is maybe one unique thing that I think entrepreneurs who are younger should lean into instead of leaning away because they're younger, and that is that there's a big temptation to think in really short time increments, quarters, monthlies, yearlies. Like I often tell my team at Wolfgramm Capital, like let's think in decades, and we have the luxury of doing that. In fact, we have the luxury of thinking in like half centuries. Like I could be doing this for 50 years and be like in my 70s. And so, how would we make decisions differently if we think in decades or half centuries or quarter centuries? And so, like being able to teach him about like how that works with like finances and money. A big thing to me for kids, just to answer your question directly, is like discipline. And so, like we require our kids to like get up early, like they have chores, they have like reading stuff they do, and then every year we try to do a couple little things with them. We try to teach them something about money, whether it's like investing in stocks or opening a bank account, whatever it is. We try to help them have some kind of skill that they want to learn and work on. Our kids are not going to be necessarily virtuoso piano players, but like one year it was like you guys are all going to learn the piano to whatever level. It's just like it's good for your brain, like learn it. And then there's another time it was like different sports, like we try. Like I don't think they're going to be, maybe they will be, but I don't think they're necessarily going to be professional athletes. But hey, this year we're going to do baseball. I know you might hate it. It's hot in Texas. We're playing baseball this year. Like let's just. So that's what some of the things we do.
Yeah, I think that's good. It's like, and I'm sure your wife's a big part of that because you're around the business. I mean, someone's got to kind of like 5 kids. That's a lot. Right? I mean, she's probably full time doing that. I would say like most people aren't really convicted about anything. Like where do you get yours from? Like you obviously seem very convicted, and like I just think from my perspective, when I started my business, I didn't really. I to be honest, I wasn't very sure about anything. You seemed like it almost feels like at the beginning you were like kind of knew what you were doing, or you felt pretty sure about it.
Yeah. Sometimes I get in trouble.
How so?
I have because I have when I've noticed that I'm pretty stubborn, and so but that stubbornness can be directed. And my parents talked to me about this. I was interviewing them for something, and they're like, yeah, like we knew you were stubborn from the time you were like a baby. Like 1 year old was like, you want to do something, it was going to be that way. So like we wanted to make sure that you were stubborn to the right things, right? Because once you got stubborn on the wrong things, then I think it was not going to be.
Yeah.
So I think it comes from. I mean, I think it comes from like maybe how I think about things, or like I want to be convinced of something, and so you like do the work, the intellectual work, and the thinking about something to become convinced of it, and get the best reasons out there, regardless of what your preconceived initial things are. Like have the best ideas, figure out the best ideas of something, and then if you're convinced of that, then you don't need a whiffle or waffle. Like that's what you're convinced of until maybe new data comes in, then you change your mind, right? And so I think there's a lot of folks who like have this like paralysis of just like not sure how to act, whatever. Like even with your business, you weren't convicted on something, but you're out and acting, doing things and growing it, even if you're maybe unsure about what that would look like, long term.
Like were you? I don't know. I just think like you had so many options, which is why I think a lot of people don't get into entrepreneurship, but like you still did, which I think is weird. Like for me, it was like I was like, bro, I'm gonna be a petroleum engineer. Screw this. Like even at 100,000 a year, it's not that much. Like, so I didn't feel like I had a good path. You obviously had a lot ahead of you. What made you want to take the leap into the business? Was it mostly your dad's health? Like you brought up your dad's health, I think, or like what was kind of the big thing? Is like, okay, I'm going to do this.
Yeah, I think my dad's health was a big part of the timing of it, but I want to do that from the beginning because originally we were going to wait a couple more years, and I was going to go spend some time here, and then come out and then we do it together. But I think part of it is I like, and maybe it sounds prideful or something, but like I like betting on myself. Like I like the idea that like your success or failure is based on your efforts and not off of some arbitrary layoff or some other one setting. I like that. I'm sure you felt that too. Is like there's something because it's hard. Like you're part of a big company. The company's huge and it does successful. It's like was that really you though?
Yeah.
And maybe everyone contributes
and you just don't get as big a piece of the pie. I mean you get the crumbs.
Yeah. And for me it's been like it's funny. Like I'm a pretty frugal spender even now. Like I don't buy like I don't have a lot of things that I spend a lot of money on. Like probably the most I spend money on is like my kids' sports stuff, which is like super expensive. That and like every new Mac laptop that comes out, I like those.
Yeah, those are bad though. $2,000.
Yeah, exactly.
What's your make that?
So I'm not a big spender, but like I do like the freedom that it gives, right? Yeah. To be able to do things on your own and stuff like that. But yeah, and I think entrepreneurship is probably one of the few ways where you feel like you can like measure yourself against the world.
Yeah, it's just the way like how you start and where you're at now. It's to me, because I see a lot, because I work with business owners, so I see a million different businesses. It just kind of, it almost feels like, like it almost feels like, this is gonna sound funny, but like Alexander Wangish, like with Scale AI, it's just like the first thing he did just like hit lightning, and to me, it just feels like for me to go where you are to where you are now and have a company worth $500 million, and you're not even on social media, it's just freaking crazy. I mean, it's not crazy because how your business runs. It's just like, it's just crazy because that's what a lot of people like. Oh, like if you're rich, then you have to be doing this, but like you're not doing any of that, And so it's just crazy to me, like how fast it's gone for you. And then obviously like you got like 50, 60 years left at least, So pretty impressive. Here's a good question. Like, have you ever made a call everyone thought was crazy, but it worked out, or it turned out to be exactly right?
Ooh. And there's a lot. Some of those are covered by confidentialities.
Okay, yeah. If you can't share, you don't have to.
No, let me think. I'm sure I'm trying to think of just ones that would not be under any confidentiality. I think so. When we were, I think even when we were raising money, I mean that the plan to go and raise money in that way was I've read every single founder's book of all the big PE funds, right? Schwartzman's book, even the hotel company with all the Marriott guys, the Hilton, the Winds, all these guys.
What got you in? Like, what got you into learning about that world? Because, like, to me, this is gonna sound funny, but growing up, I didn't even know this existed. Like, I was like private equity. Like, it's like,
yeah,
I just had no idea about this world. Like, was it your father or your family, or like, how'd you get into that world?
Yeah, no, they didn't either, because my dad's company was not even private equity or things like that. It was basically there's like a Chinese guy who was buying some hotels, and my dad worked for their hotels originally. They had one hotel in Anaheim, California, right, Disneyland, right by Disney, and my dad worked there, and he drove the shuttle, and then did the front desk, and then eventually managed the hotel, and then when that guy was like, Chinese guy was like, oh, I'm gonna go buy another hotel. Can you come help us like look at what type of hotel and like what kind of stuff? Because the Chinese guy wasn't involved necessarily the individual stuff. So my dad went in and helped him with that, and then they've grown from there. And so that wasn't even private equity or anything like that. For me, to be honest, I'd never heard the words private equity put together until law school. I didn't know anything about it. I was an Arabic major in undergrad. So I wasn't finance. I wasn't business. I wasn't.
Well, like that's, I just find it so unique, like the path you got on, like, and it just kind of feels like it was like you, like even the Arabic thing. Like, why did you do the Arabic?
So I speak Mandarin before that. So I served as a missionary for my church, and so I spoke Mandarin.
Of course you do.
Yeah. And so I knew I wanted to do business something, and so I just figured, okay, what's the most like valuable language? And like a lot of people are like Spanish or whatever. I was like, Spanish is probably the most valuable, like the most useful. But there's also a million Spanish speakers.
Right. I mean, Chinese and Arabic, it's like,
yeah, exactly. And Gulf. And that was why I came to Texas originally. Is I was originally thinking about working. And there was a law firm here that did a lot of with the oil stuff out in because oil here in Texas and then oil out in the Gulf and all that kind of stuff. So, it was just I think for me it was I started getting into law school. I realized that one, there's easier ways to make money than law. that was a big one. Is that there's easier ways to do it, and two, it was like it did feel like there was a period of time I could always go back and be a lawyer. Right, I felt like that was always going to be there. Whereas the opportunity to start this company at this time with the COVID stuff, that was a huge. If COVID hadn't happened, we wouldn't have started the company.
Who's that? So like because it happened, was that something your dad brought up? It's like, hey, this could be something, and then you pursued it, or was it?
No, I brought it up.
Wow.
I said actually, my dad was there. This was all happening, and then I told my dad. I said, Dad. My dad was in the hospital. He was hospitalized for a month. He almost passed from GBS. And I said, Dad, I have a super close relationship with my dad, like very, very close. I look up to him. He's the most brilliant man that I think I've ever known, and I've known a lot of smart people. Yeah. He's immigrant from Tonga, came here, made a life for himself. We didn't grow up with a lot of money, but had a super happy.
It's always the immigrants, dude.
Yeah, I know.
It's always
exactly. So he almost passed, and I said I want to work together with him, and I wanted to work together with him, and I was kind of worried about how much time he'd had left, and then COVID hit is at the same time as. And so we're like this, like a perfect storm.
Jump.
Yeah.
Okay. So sorry, I keep asking you questions with the questions. My mind's racing. Going back to that call, like, did you make a call that everyone thought was crazy that worked out? You were talking about that.
Yeah. So I think a big one of that was when we so we wanted to buy this hotel. Yeah, I can tell the story. Okay. Because I've told the story publicly. We wanted to buy this hotel. I found out about it in law school. So in law school, was sitting in. I wasn't even taking the class. I was a research assistant for a professor who was teaching IP law, intellectual property, patents, and all kind of stuff. Kind of boring, to be honest. And I was her research assistant, and as part of that, I just had to sit in and help with whatever needed to be helped with and stuff. And so I sat in the class, and she was talking about one of the classes early on about how there was a court in the Eastern District of Texas, and they do a lot of patent law. Like there was a judge that basically said, look, patent law is usually slow and it's hard. You have experts, whatever. I'm going to be like the court. I'm going to make this court. I'm going to change some of the policies and rules. We're going to have this rocket docket, which means that we're going to get cases in and out. And we're going to do this in Marshall, Texas, middle of nowhere, Texas, right? On the border of Texas and Louisiana. Yeah. Now, all of a sudden, like 80% of all patent cases are in Eastern District of Texas. Okay, so over the last like couple decades. If you were to pull up your phone right now, Apple, Google, Facebook, TikTok, Instagram, when they have their little agreements that no one reads, you scroll down to the bottom, it'll say something like a choice of venue or form selection clause, which basically says if you sue us, you have to sue us with this Eastern District of Texas. Almost all of them, right? So the biggest tech companies in the world are going out to Eastern District of Texas to litigate. Okay, and so I started thinking about it. Went online and looked up and found that that there's only one Marriott hotel in Marshall, Texas, by the federal district courthouse. Only one hotel. I started looking at it and said, I wonder what they're charging, because you're having these huge law firms, like bet the company type of litigation, right? Like, these big lawsuits, like when Facebook had this big lawsuit about some of his tech or his advertising, like that lawsuit, Eastern District of Texas, right?
Like, what's special about it? Did you just say?
The thing that's special about it is just that the judge there, normally patent law, because it's like kind of complicated and stuff, it takes a long time to go through the courts. Right, okay. But that court decided to make it like a faster docket. So rather than giving them like this long, it's quicker. So they just make things quicker. Okay. And so they love, like the big tech companies love that, because they're like, oh, we're gonna get sued, rather than us having to spend legal money, because the plaintiffs can drag it out for years and years and years and years and years. We can do it quickly and get things dismissed and blah blah blah, right? Gotcha. Okay. And so that's why almost everyone has it in Eastern District of Texas. So anyway, I started looking up there and like Marriott. I was like, I bet they're only Marriott in the city. And if you're a big law firm, all the big law firms have like a purchasing, like corporate purchasing. Like they don't necessarily go on. They have like agreements with the big brands directly, like Marriott and Hilton and stuff. Right. And Marriott's the biggest of those. And so I started looking and saying, like, how is it that this hotel is charging like $80, $90 a night when they're the only Marriott hotel right next to the only district court, the Eastern District of Texas court, which has all this litigation, all these lawyers and stuff. And so we're like, I think this is a good investment. Like, we started looking at it, like really like thinking like, I think this is a good investment because here's what we're going to do. And this is the thing we like about hotels, is that hotels, most real estate, if you want to improve the value of the real estate, you got to spend money on it. Like you got to renovate, like you think about an apartment, you buy an apartment building, you put in new showers, whatever else. Hotels have like this business component where we can increase value without necessarily putting a bunch of money into it. And so we ended up, Marshall, Texas, we ended up buying the hotel, okay? And one of our first hotels that we bought. So this is also early too. And literally overnight, we're like, we're going to go back over to these law firms and we're going to renegotiate their contracts. And we're going to be charging like $400 or $500 a night, like instantly. Because these hotels, you got to remember also these law firms, they're used to litigating in New York, in LA, where you're paying, if you're staying at a nice hotel in LA or New York near the courthouse, you're paying hundreds, if not sometimes like $1,000 a night. Because these are partners, these big law firms. So they must have
had a lot of litigation actually happening there, and they're staying at the hotel.
Constantly. They were staying there. They just weren't charging them correctly for it. They were charging them like a trucker.
Man. Bro, what a call.
And so it's literally, I mean, we did a lot of things there. Like, we also removed some of the rooms and turned them into war rooms for the lawyers and rented them out like on a daily basis for like thousands of dollars. Because we're like, lawyers are going to come in. In fact, we also put a shipping container on the property with like chairs and desks. So that way they could take it out, rent it from us per day, each desk and chair, rent it from us, put it in the war room, and now have their whole, like, because if you're staying at a hotel, where are you gonna talk with your clients about? And you're all gonna be sitting on a little bed, someone's sitting on the toilet while you're trying to figure out how to.
So did you guys just bank on the fact this is the only hotel they have to use us and they're gonna pay whatever?
Yeah.
Wow, what a call, bro. Yeah. Because it's like it's just like, I mean, if I saw a hotel in the middle of Texas, I would just be like,
yeah, and that's what most people, even the owners. The owner didn't realize he was sitting on a gold mine. I mean, he's talking about millions of dollars of just untapped.
So basically, did you go to the owner and you said, hey, like, here's the deal, and then he had some piece of it or whatever because it's his business, but
we bought it totally from him, completely out from him. We had a couple other hotels in the area that we were looking at too. So it was kind of we had told him, said like we're buying up other hotels, and we had one in Louisiana that we were looking at buying too. Yeah. And so we're like, hey, this kind of makes sense.
You guys still own this hotel?
We still own it, yeah. Oh, bro, that's the one hotel that if we were to sell everything, we might keep that one.
Wow. Okay, so what role does faith or spirituality like play in how you lead, if at all?
I'm a big church guy. I go to church every Sunday. I'm a big it plays a big role, but I don't think it plays a role in the sense of like, I think it plays a role in a couple things. One is it's like I think it's like the base of things. Like I know a lot of folks with a lot of money, very successful, and they just seem like torn up inside. Like they don't have they seem conflicted inside. Like maybe it's a sense of not having what they feel like their purpose is, or maybe it's a sense of like never having enough. Or like there's a whole lot of these things that can come out, right? And I'm sure you've seen it from business owners of like, when is enough or whatever else it is. And so I think like the principles for me, like my spirituality, religious principles helps a lot to like stay grounded and like stay like what's focused on what's focused. It also helps when things are stressful and it's like kind of having like a greater sense of purpose is super, super helpful. I also love the sense of community that a church provides, like for my kids, and for me, like being able to be with other people in your community. I currently, even as involved as I am in our community, we have the biggest project going on in our city, like by far. We often have different things going on, business stuff, whatever. Like I find so much sense of satisfaction when I go to a church building on a Sunday, and there's 100 of us from all walks of life, and we're just trying to do good and be better and raise our kids in a way that contributes to society. Like I find a lot of sense of satisfaction in that, even if we're going to some little potluck thing and the food's not very good, or people bring some weird thing, and it's like I don't know. There's something about that that's like very humble and also I just enjoy communicating with those kind of with everyone, and I love it.
Okay, so this is a little bit of a lightning round. It's just like the first thing that comes to mind. You can go deeper if you want. One book that changed the way you think.
The Complete Financial History of Berkshire Hathaway.
One thing you say no to even when it's tempting.
Dinners with clients and stuff.
That might not be that tempting, it sounds like. What's your definition of enough?
When I can choose when to work.
If you lost everything today, what's your first move?
I think if I would have lost everything today, first I would sleep for like 2 weeks. Turn my phone off and sleep for 2 weeks. That'd be good. But if I were to try to start again, I'd probably do something on the operations side. If I lose everything today, I'd go like for in hotel. If I lost everything today, I'd go work front desk at a hotel and start there. It's the best way.
Really?
Mm.
Why do you say that? Like knowing what you know now, even knowing everything, all the skills you have, like you would go work at a front desk.
I'd go work at a front desk right now, because if I lost everything, there'd be some time. There's time to build up, right? So
right.
You need time to build.
Right.
And in order to raise money again for hotels and all that, and especially if I lost everything in team and everything, I'm talking about losing everything.
Oh,
team,
So
nothing.
Scratch.
Yeah, I'd start from the operations side, whatever it is. So if I was in manufacturing and we lost everything there, I'd go start learning how to use the CNC machine. I think that's the place to start.
Fire podcast, like I was looking forward to this all day. Just like super impressed with what you've done. If people want to either learn more about you or invest in some of the deals like I've done with you guys, like where can they find that stuff out?
Yeah, we're not on social media. So, no, we have a website, wolfgramm.com. Okay. You can go there and there's some stuff on there.
Wolfgramm is with 2 M's at the end.
Yeah, Wolfgramm.
Guys, by the way. Yeah,
that's right. Wolfgramm, WOLFGRAMM.com. You can go there and there's like a contact sheet there, or you can find me on LinkedIn. That's probably more easier for me to find me on LinkedIn.
So guys, like the big takeaway today is if he can have no social media, build a $500 million company, then there's hope for you. Dude, thanks for being on the pod. Can't wait to see what you go.
Thanks, man.